Usually when we think about a bank vault, there is this expectation of just like total static security.
Right. It's solid steel.
Yeah, exactly. You spin the dial, the gears lock into place, and whatever is inside is completely sealed off from the chaos of the outside world. It's safe, but it is entirely frozen.
Completely inaccessible.
Right. But what if the thing locked inside that vault isn't just gold bars or, stock certificates? What if the vault is actually your own home?
Oh, wow. Yeah.
And the thing trapped inside is your future health and your longevity.
Right.
Suddenly, that impenetrable safe feels a lot less like protection and a lot more like a trap.
It's a total paradox.
Yeah, because today, we're in mid-April 2026.
Yeah.
And millions of Americans are basically being held hostage by their own historically low mortgage rates. And this is colliding with a biotech revolution in ways that, nobody really predicted.
No one saw it coming.
So, our mission for today's deep dive is examining this truly fascinating stack of current data. We are going to connect the gridlocked housing market and all these macroeconomic trends with cutting-edge longevity science.
Which is moving incredibly fast right now.
It really is. And it all culminates in a radical reframing of a very controversial financial tool. Okay, let's unpack this.
Well, on the surface, if you look at this stack of sources, mortgage rates and something called cell reset therapy, they seem entirely unrelated.
Yeah, completely different world.
Right. They look like they belong in completely different disciplines. But when you synthesize this data, they reveal a massive shift in how older generations are going to survive and, actually thrive in a really volatile economy.
Okay, but before we could even begin to understand how people are going to fund these extended lifespans, we first have to establish the economic reality of where they actually live.
The housing market.
Right. And the housing market in April 2026 is it's an absolute paradox. We are looking at the data, and as of mid-April, 30-year fixed mortgage rates are finally showing some slight relief. They dropped down to 6.25% recently.
Well, it depends slightly on who you ask, but yeah. Freddie Mac has the 30-year at 6.37%, while Zillow's lender marketplace is showing about 6.15%.
Okay.
And if you are looking at a 15-year fixed rate, that is sitting right around 5.62%.
Which, sounds like good news on the surface. Rates are ticking down a bit. But then you look at the refinance market, and it is effectively closed.
Completely dead.
Yeah, refi rates are up at 6.78%. So if you are one of those millions of borrowers who secured a sub 3 or 4% rate back in 2020 or 2021, you are locked in. You are not touching that mortgage.
Right. And that lock-in effect is really the defining feature of the current housing landscape. Rates are hovering around the low sixes, but the actual number doesn't matter as much as the gap.
The gap between what they have and what they get today.
Exactly. If you have a 3% mortgage from 2021 and today's rate is 6.5%, that 3.5% gap is a financial moat that you simply will not cross.
You just stay put.
Yeah, it keeps inventory completely off the market because homeowners simply refuse to trade a historically low rate for a rate in the sixes.
And the prices reflect this weird standstill. Nationally, home prices dipped slightly. They were down 0.2% year over year in February.
Which is actually a big deal.
It is a huge milestone, because that is the first year over year drop we have seen since 2012.
Wow.
But that national average masks some wild regional disparities. Look at the Sun Belt. Cape Coral, Florida is down 9.6%.
Ouch.
Right. But then you look at Rust Belt cities, and they are surging. Kansas City is up 8.6%, and Pittsburgh is up 5.8%.
We are looking at completely different economies depending on the zip code. I mean, the pandemic migration boom pushed prices in places like Florida to just completely unsustainable heights, and now we are seeing the correction.
Yeah, the bubble bursting a bit.
Yeah, exactly. Meanwhile, the Rust Belt remained relatively affordable, so the limited pool of active buyers is flocking there, which drives prices up. And to understand why we are seeing this broader national gridlock, the sources point to 4 distinct macro forces shaping this spring 2026 reality.
Okay, let's go through them.
The first, as we mentioned, is the collapsed refinancing market. The second is the Federal Reserve's uncertainty.
Right, because entering 2026, the market was incredibly optimistic about multiple rate cuts. I mean, everyone thought we were going back to cheap money.
Yeah, well, that optimism is completely gone. A growing number of FOMC members are predicting 0 rate cuts this year.
0.
Or at most, 1. The sources reference the CME FedWatch tool to illustrate this.
Wait, can you explain what that tool actually is for people who might not know?
Yeah, sure. To understand that tool, just think of it as a massive probability matrix based on Fed fund futures contracts.
Okay.
It basically tells us what the market is actually betting with real dollars, not just, what pundits are saying on TV.
Got it. Put your money where your mouth is.
Exactly. And right now, the money suggests the most probable next move might be a really modest 0.25% cut in June, but even that is heavily contested because of stubborn inflation data.
Right, the inflation just won't quit. Which brings us to the third force, right? Tariffs.
Yes, tariffs on imported lumber and steel.
Wait, hold on. You're saying geopolitics and lumber tariffs are actually keeping people from moving? Like, how does a tariff on imported steel stop someone in Ohio from buying a pre-existing home?
It comes down to the substitution effect.
Okay.
There are tariffs on imported lumber, steel, and appliances, right? And that is pushing construction costs higher.
Which makes new homes more expensive.
Exactly. The National Association of Home Builders notes that building material price growth has remained above 3%. When new construction becomes too expensive to build profitably, developers pull back.
How is he?
So that forces buyers who wanted a new build to flood the existing home market. But because of the lock-in effect we just discussed, there are no existing homes to buy.
Wow. So the tariff chokes off the new supply.
Right. Which artificially inflates the value of the old supply, keeping everyone frozen.
That is wild. Which brings us to the fourth force, global uncertainty.
Yeah.
The sources highlight conflicts, specifically tensions involving Iran, which are driving up energy costs and adding significant volatility to the bond markets. This impacts the 10-year Treasury yield, which right now is sitting at 4.317%.
What's fascinating here is how geopolitical chaos and tariff-driven construction costs are acting as a heavier anchor on the spring buying season than the actual mortgage rates themselves.
Because everything is so interconnected.
Right. Mortgage rates don't just magically follow the Fed, they directly track that 10-year Treasury yield.
Yeah.
So when global conflict flares up, investors panic and move their money around, which forces that yield up.
So a flare-up in the Middle East
Literally translates to a higher mortgage quote for a buyer in Kansas City the very next morning. Normal domestic economic data is taking a back seat to global events.
It's essentially a massive financial Mexican standoff. I mean, homeowners are holding their 2021 low rates hostage, refusing to sell. Meanwhile, buyers are staring down a gauntlet of tariffs, global uncertainty, and inflated construction costs.
Exactly.
Nobody wants to make the first move, meaning everyone is stuck exactly where they are.
So we have this frozen housing market where seniors refuse to leave. But this creates a totally new, unprecedented problem.
How so?
Historically, you retired, paid off the house, and lived there for maybe 10 or 15 years. But what happens to that financial map when suddenly science guarantees you're going to live another 30 years?
Yeah, that is the exact pivot we are seeing in the broader cultural conversation. Because if the external world is too expensive and chaotic to navigate, people are turning their focus inward.
Into their own biology.
Exactly. According to the data, the new obsession is how to live significantly longer. Just look at the television landscape right now.
Oh, the Kara Swisher show?
Yes. On April 12th, CNN premiered a new series called Kara Swisher Wants to Live Forever. And they aren't just talking about, vague wellness trends or buying expensive face creams. The data they present is hard and actionable.
The statistics they highlight are monumental. They look at experts showing that simply getting 7 to 9 hours of sleep yields an 18% longevity boost.
Wow.
Adopting a plant-based diet gives you a 21% boost. And regular exercise. That drops your death risk by a staggering 46%.
I mean, if you're listening to this on your morning walk right now, congratulations, you're literally buying yourself extra years of life.
Yeah, keep walking.
A 46% reduction in mortality risk just from moving your body is incredible. But the sources show it doesn't stop at lifestyle. The biotech industry is moving at an unbelievable pace.
That brings us to Life Biosciences. They just raised $80 million for something called cell reset therapy.
$80 million.
Yeah. And this isn't just theory anymore. It is entering its first human trials.
Okay, cell reset therapy sounds like pure science fiction. How does that actually work in a human body?
To understand this, imagine your cells are like old smartphones whose batteries just won't hold a charge anymore.
Okay, I know that feeling.
Right. They get sluggish, they glitch, they stop performing their functions well. For decades, traditional medicine tried to just, patch the battery or manage the glitches.
Argue the symptom.
Exactly. But cell reset therapy literally rewrites the software back to its factory settings.
Wait, really? It just resets them?
Yeah. Scientists are using specific proteins, they're often called Yamanaka factors, to reprogram a mature-aged cell back to a youthful state. It forces the cell to behave like a young cell again without making it forget its identity.
That is just It's a fundamental shift in how we approach aging.
Yeah.
Because for decades, the focus was on anti-aging, which was largely vanity-driven.
Oh,
It
absolutely.
was superficial. It was about smoothing wrinkles, dyeing hair, looking younger on the outside, while the biological clock kept ticking away on the inside.
And the shift we are seeing in 2026 is a move toward what the experts are calling functional longevity.
Functional longevity.
Yeah. This focuses on maintaining strength, mobility, cognitive clarity, and a sense of purpose. It is about extending the health span, not just the lifespan.
So not just adding years, but adding good years.
Right. Being able to actually hike with your grandchildren or even great-grandchildren rather than just living longer hooked up to machines in a hospital bed.
Well, here's where it gets really interesting because I have to push back on this utopian vision.
Go for it.
We just spent the first half of this deep dive painting a picture of an economy that is entirely gridlocked. Homeowners are trapped by the lock-in effect. Inflation is stubborn. Tariffs are pushing up the cost of goods.
Yeah, the macro picture is tough.
So think about a 75-year-old guy right now.
Okay.
Let's call him Bob.
Okay, Bob.
Bob is drinking his green smoothies. He's doing his morning Pilates. He is basically biohacking his way to 95.
Oh.
But every time he opens his property tax bill or sees the price of groceries, his stress goes through the roof. His bank account is draining while his body is thriving. It's a terrifying paradox. How do everyday seniors afford to actually live those extra decades, especially in the high inflation, tariff-heavy economy we just talked about?
If we connect this to the bigger picture, that is the exact tension where all of our sources converge. Living longer, extending your functional years, it requires vast resources.
It's expensive to be healthy.
Incredibly expensive. Staying mobile, affording specialized diets, paying for cutting-edge cell therapies, and keeping your mind sharp for an extra 2 decades takes a lot of money.
Yeah.
How do you solve the financial puzzle of a 20-year extended lifespan when your wealth is trapped in your house?
The answer, according to the data, lies in unlocking the very asset that the macro economy has trapped seniors inside: their home equity.
Exactly.
Which bridges us to our final and honestly most surprising source. It is about a financial tool that has historically had a pretty terrible reputation. I mean, we all know the late-night TV commercials.
Great.
For decades, the reverse mortgage has been viewed as a predatory last resort.
But spring 2026 is emerging as a uniquely prime window for reverse mortgages. Look at the specific market conditions.
That makes no difference.
Rates are showing some slight downward movement. Home values are still elevated in most parts of the country. And importantly, a reverse mortgage requires no monthly housing payment and no traditional income qualification.
Okay, to really understand this shift in perspective, we have to talk about a book by Kim and Ray Gedstead. The title of this book is incredible. It is called One Reason to Not Get a Reverse Mortgage.
Which is quite the hook.
Right. You see that title and you think, oh, this is a takedown. This is a warning.
But the irony of that title is central to understanding their argument.
Yeah.
The book is designed to help seniors make informed decisions, and it does identify specific cautionary scenarios. But despite the title, the book overwhelmingly endorses reverse mortgages as a powerful life-saving tool for the vast majority of seniors.
And I don't use the term life-saving lightly here. They mean it literally.
Yes, they do.
This is where the macroeconomic data and the longevity science merge directly into human biology.
We really have to look at the physiological impact of financial stress. What happens to the body when a senior is living on a fixed income? Inflation is eating away at their purchasing power, and they are terrified of running out of money.
Well, let's actually get into the mechanics of that, because it's not just a bad mood, it's chemical.
It is entirely chemical. The body responds to constant financial insecurity by chronically elevating cortisol levels.
The stress hormone.
Right. Cortisol is an evolutionary alarm bell. If a tiger is chasing you, cortisol floods your system. It shuts down non-essential functions like digestion and deep cellular repair and pushes all your energy into your muscles to run.
So you can survive the immediate threat.
Exactly. In short bursts, it is incredibly helpful for survival. But financial stress doesn't go away in 5 minutes like a tiger does. It is a tiger that lives in your living room 24/7.
And chronic elevated cortisol is devastating. It literally destroys the gut biome. It degrades brain tissue, and it places immense strain on the cardiovascular system.
It's toxic over the long term.
Yeah, at a microscopic level, it shreds your telomeres, which are the protective caps on your DNA. It literally accelerates cellular aging.
So all that work Vibe is doing for functional longevity, the plant-based diets, the sleep, the Pilates.
All the biohacking.
Right. It's being completely undone at a cellular level by the financial terror of his draining bank account. Financial insecurity causes disease. It is a biological fact.
So when a senior takes out a reverse mortgage, they're essentially eliminating their monthly housing payment. They're tapping into the equity they have built up over decades without the requirement to get back until they leave the home.
Yes.
And by eliminating that massive monthly burden, the financial stress basically evaporates. The cortisol trigger is removed.
This raises an important question that completely challenges our traditional view of personal finance.
How so?
For generations, we have been taught that the ultimate goal is to pay off the house and never touch the equity.
Yeah, keep it in the vault.
Exactly. Keep it locked in that vault you mentioned at the beginning. But keeping your home equity locked away while you suffer from chronic disease-causing financial stress is completely counterproductive to the functional longevity mindset.
Wow.
If the goal is to live a long, healthy, functional life, then that home equity is no longer just a financial asset. It is the medicine.
Wait, so the Gedstads are essentially prescribing a financial product like it's a blood pressure medication?
In a very real way, yes. By immediately lowering the physiological stress response, a reverse mortgage stops the accelerated aging caused by financial panic. It is literally a health intervention masquerading as a loan.
That completely shatters the old stigma. I mean, if you are aging faster because you are terrified of the tariff-driven economy and inflation, and accessing your equity stops that terror, then it is a heroic tool.
It's protecting both wealth and health.
Yeah, you don't have to sell your house and face the high prices and rates of the open market. You bypass the Mexican standoff entirely. You just unlock the vault from the inside.
It allows the senior to stay in the environment they control, fund their functional longevity, and drastically reduce their biological stress markers.
That makes perfect sense.
And today's specific market conditions make this more relevant than ever. With 30-year rates hovering in the sixes and the refinance market totally closed, traditional borrowing is just too expensive for a fixed-income senior. Tapping equity without a required monthly payment bypasses that entire interest rate trap.
So what does this all mean? Let's just trace the journey we just took through these sources.
It's a wild ride.
It really is. We started by looking at a locked-up spring 2026 housing market, a market dictated by global tariffs, geopolitical conflicts moving the 10-year Treasury yield, and a cautious Federal Reserve that is basically keeping 2020 borrowers frozen in place. Then we looked at what happens when those trapped homeowners realize they're going to live another 3 decades. We explored the booming science of cell reset therapy and this whole concept of functional longevity.
The health span.
Yes, the health span. And finally, we tied it all together with the realization that accessing home equity via a reverse mortgage isn't a financial defeat. It might literally save your life by instantly lowering the cortisol that causes cellular aging.
It is a perfect synthesis of macroeconomics, biology, and personal finance. I mean, the lines between those disciplines are just disappearing.
They really are. And for you listening, whether you are trying to map out your own long-term future, or maybe you are trying to help an aging parent navigate these really chaotic economic waters, this data proves one undeniable thing. Wealth and cellular health are intimately biologically connected.
You cannot optimize one while ignoring the other.
Exactly.
They are just two sides of the same longevity coin.
But all of this leaves us with a lingering thought, and we want you to really mull this over after the show.
It's a big one.
Yeah. If the 2026 housing market is already choked by a severe lack of inventory, and these new longevity breakthroughs, combined with stress-reducing reverse mortgages, mean that seniors are going to comfortably live to be 100 years old without ever having to sell their homes.
Right.
Are we heading toward a permanent structural freeze in American real estate? Think about it. How will the next generation ever buy a home if the current generation literally never leaves?